Welcome to Right Now, a new video series where Wright Lindsay Jennings' legal team explores hot topics in the world of banking and finance law. Our goal is to give you a heads up on the legal issues and challenges financial professionals should prioritize right now. Welcome to Right Now. I'm Adrienne Baker, and this is my partner, Jake Fair, and we're here to talk to you today about BSA AML. Jake, what BSA AML tips do you have for banks regarding fintech partnerships?
BSA, as you know, Adrian, is the Bank Secrecy Act, and AML is anti-money laundering, and that's an important part of any compliance function from small community banks to large institutions. And fintech partnerships have been in the news lately, especially as it relates to banks. And fintech partnerships offer a lot of times great solutions and resources for banks, especially community banks that are trying to, trying new technology and doing different types of things like that. There's been some recent cease and desist orders from the Federal Reserve and the state agencies about fintech partnerships, and the BSA AML compliance function of that is, and the takeaway is that a lot of your compliance obligations are your obligations as a bank. The fintechs aren't regulated by your regulators. So what you've seen over the past several years is banks get into these fintech partnerships that don't take the compliance piece, the BSA and AML piece, seriously. And that has resulted in huge fines and cease and desist orders, and frankly, huge reputational risks for a lot of banks. And that's been the important reminder for all community banks, especially in a time where margins are super thin with interest rates. Compliance costs are higher than ever, and it's easy to try to take a shortcut on a BSA AML compliance cost, but it's important for banks to remember when you're considering fintech partnerships, you should consider your compliance cost and what compliance looks like for your institution.
Well, you mentioned cease and desist orders recently. Are there any lessons that we can learn from those orders, at least related to fintech partnerships?
Yes, Adrian. I think the takeaway is that banks have some discretion under regulations on how they structure their BSA and AML protocols and their compliance program, and there's not one box fits all approach to compliance. And I think that what banks need to remember is how you structure your BSA and AML compliance program should consider the risks associated with your institution, your customer profile, the products and the services that you're offering to customers. And when considering how you structure your program, those are very important factors. And I think fintech partnerships have been exciting and very, very for lack of a better word, fun for banks to get involved with, but they have serious consequences. And you've seen several fintech partnerships file bankruptcy and some newsworthy events related to others because banks haven't been complying. Some banks have not been complying with their obligation when entering these partnerships. The important thing for banks to remember, especially if you're a decision maker at a state, at a community bank, regional bank, national bank, is when you're looking at fintech partnerships and you're looking at is this the right thing for us, you have to consider the compliance cost and how you would need to restructure your BSA AML program to fit that new product, service, and risk and customer that you're seeking through a fintech partnership. Even though it's going to be exciting, it's going to be fun, those are things that you need to consider before agreeing to enter into some partnership. Otherwise, you'll end up like some of these banks that we've seen subject to cease and desist orders and being ordered to revise their whole bank structure and their BSA AML program completely to address the deficiencies. And that's never that cost. I often tell people what's the cost of non-compliance. It's higher than the cost of compliance. So that's something for banks to consider.
Well, Jake, thank you. That was an interesting discussion. I learned a lot. And thank you for joining us for today's Right Now.